Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, you say there could be new life in the Russell 2000, and that could be news or good news for all the ships at sea.
Yeah, well, I mean, when you look at the Russell 2000, the majority of this year, it has been trading sideways in a very choppy range. Really, from the highs down to the lows, it's been almost about 11% price swing in the Russell 2000, just back and forth all year. And typically what happens is when we see the Russell break out and start a new trend, that's when we tend to see sector rotation really come into play. Money starts to pile into specific sectors, and we start to see some really big movements in the market in these sectors and individual stocks. And last week we saw the Russell 2000 break above its halfway waypoint in this sideways range that it's been in. And I think we're on our way to see the Russell test resistance. And if the Russell 2000 can break 2360, I think it could be off to the races, and that actually might spark a nice big rally in the U.S. stock market. I think sectors will take off in a huge way. There's going to be some very hot sectors like we saw last year, because this year most sectors have been very dormant. They've been trading sideways or pulling back dramatically like the Russell 2000 has been doing, while the stock indexes kind of slowly keep grinding to all-time new highs almost every week. So it's been a tough week for sectors and individual stock traders, but if the Russell breaks out here over the next couple of weeks, we could be back into a sector rotation market. And the Russell itself actually has a chart pattern pointing to a 30% rally over the next several months. So if that takes place, we are going to have a pretty exciting year-end in the stock market. Big gains across the board, not just the Russell, but the NASDAQ SP 500 as well.
What is it about the Russell that helps boost the rest of the market?
Well, the Russell 2000, it's a small cap stocks, and that's where we see really people who have high risk tolerances, when they're piling into small cap stocks, that means they're very bullish. It means the sentiment of the masses in general are just feeling like they need to risk their money and they want to get in, they want to try to grow their capital. And so when we see that sentiment and money starts flowing into these small cap stocks, we start to just see money will start to chase sectors. Whatever sectors are starting to lead, all that money starts to go to those leading sectors as people chase prices up. And it's really just kind of the mass kind of psychology of how fearful the group of people, investors are in general. So when we see money piling into these riskier stocks, that is telling us that money is comfortable. It's getting put into the market. It's expecting long-term and big growth. It's not going to just sell right away and lock in gains, which is what it's been doing pretty much all year. As you get a little rally, and then boom, people take their money out and they kind of wait for the market to reset again. But when the Russell breaks out, that's telling us the masses are just kind of dumping money into the stock market. They're expecting bigger gains and expecting gains to run for quite some time. And that's what kind of really starts to move these sectors going forward.
Would the so-called Robin Hooders be the people most interested?
It's possible. I mean, I think it's definitely a very large group. This year has been a tough year for pretty much all traders. Doesn't matter if you're a Robin Hood trader or not, because it's been a very sideways range. When this market breaks to the upside, that's when everyone, including this is when the Robin Hood traders or people who are just chasing momentum, which I do as well, are going to get really excited and are going to have a really nice, good winning streak, because when something breaks out of a pattern, it's actually going to continue to rally and push dramatically higher. And that's what we haven't seen a lot of this year. So when the Russell does break, Anyone who's a very aggressive trader is going to do much better, because when something breaks and pops, it's going to keep on running. So that's kind of what we're all looking for in general. Obviously, those who are a little more new to trading, this year's been a very tough year for them, but a breakout in the Russell will definitely allow them to hopefully make back a ton of those gains. The key is making sure you lock in some of those returns and manage your positions, because eventually things will roll over and you can give it all back.
When you're saying some sectors could benefit, any idea which ones?
Well, there's some interesting sectors starting to rally. I mean, the technology sector continues to be one of the leaders. The NASDAQ, which is kind of technology, biotech, have been doing very well. Real estate continues to do well. We're starting to see some interesting other sectors like the water resource sector. PHO is the ETF for that sector. So we are starting to see some of these sectors continue to hold up and show signs that they want to go higher. There was a new trigger last week in the food and beverage industry. It's got a nice chart pattern. It looks like it's just starting another trend to the upside, and that is PBJ for the food and beverage sector ETF. It's got a nice bull flag pattern on the daily chart over the past month. It's just starting to turn up, and it's got about a 5% upside move. More or less, it would rally up to the highs that it had back in June. So I think there's some interesting potential here going forward. And really, I think when the Russell breaks to the upside, I think it's just a matter of time before it does. That's when we're going to start to see big bouts of money just pile into individual sectors, and that's going to give us a gauge of, okay, where is this money actually, really seeing the upside potential? And it could be a game changer. I think a lot of sectors that may be leading right now could end up falling behind, and we start to see the leaders of last year, which would be solar, the electrical vehicle market, maybe even the marijuana, the MJ sector ETF, maybe some of those and some of the ARC innovation type ETFs. I think those could really come back to life. They keep showing bouts of accumulation going in those, but the market just isn't in this kind of in the phase yet where big money is dumping into the individual sectors and just driving price up. So it's just a matter of time, but right now it seems to be real estate, the water market, home builders continue to be doing well. So that's kind of, those are some of the areas I'm watching right now.
Chris, this has almost been so far the year of rotation, where you have about a month where a particular sector or segment does well, and then all of a sudden they drop and something else picks up. Is this a new trend or something we've seen in the past?
It's definitely a trend that we've been in this year, but we have seen this in the past quite a bit. And some days here we're seeing like the Russell 2000 will rally 1 or 2%, and the NASDAQ will be relatively flat, not really budging. And then the next day, the Russell 2000 is down pretty big, and the NASDAQ is moving up. It's just the money this year continues to be sloshing. It doesn't know where it wants to go, into small caps and then back to the big tech blue chips and then back into the small caps. It is been a yo-yo for the last several months. But again, this is a time where the markets are consolidating, and this is what this is. The market is building a platform. It's just trying to work the bugs out. It's trying to move shares from people who are nervous about owning stocks into fresh hands, fresh investors who are willing to hold for larger gains going forward. And so the longer this pattern plays out in a sideways motion, which you can see in the Russell 2000 daily chart, the bigger the upside potential is. So I think there's a lot of explosive move built up here. This has happened many times before, and it's nothing out of the norm, that's for sure. It's actually a really good thing. When the markets pause, after a pause comes a surge. So we're really just kind of waiting for that next surge, and we are in a bull market. The odds are it's going to break to the upside in rally, and that's what we're looking for.
We'll have more with Chris Vermeulen right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what do you see going on with crude?
Yeah, crude oil has had a pretty wild little bit of a shakeout here in the last couple of weeks. We saw it break down below more or less $55 a barrel, and then it had a really strong rebound in the last week and a half and has bounced back up to some recent highs. It's also bounced up to the 50-day moving average, and crude right now is just struggling at resistance because there's two levels of resistance here. The 50-day moving average, which is what a lot of big money and position traders look at, and institutions. If price is under that level, it's going to naturally act as a level where people start to sell their positions or short sell the market and try and drive oil down. It's also a previous high from earlier in August. So there's a lot of volume. People who got in at this level in August, they rode the roller coaster down for a sharp drop in crude oil, and now it's bounced back up. And when it gets back to those levels, that's when traders and investors will go, "Whoa, I got my money back. Thank God, I'm getting out." And they'll close their position. So it creates a lot of overhead supply of people wanting out of that roller coaster trade that didn't work out. So we really need to see how crude is going to play out over the next. I think it's going to take potentially a week or two. I think it might pull back or trade sideways here for a little bit. It does have the characteristics, though, that it put in a bottom about a week and a half ago, and now it's just going to take a bit of a pause because it has had a very strong run from the low not that long ago, only a few sessions ago, really. It's rallied 12%. So I wouldn't be surprised if it pulls back another 2 or 3% and then starts another run and heads up towards $74 a barrel. Right now it's trading at $68 a barrel. So we're looking at, $6 potential move in crude, but I do think it's going to be a little bit out of favor here for a week or two as it takes a breather.
What's happening in the metals market?
Yeah, the metals market continues to be struggling. I mean, it really has been struggling for pretty much over a year already. It's trying to get traction. Gold is holding up the best. Physical gold. It's trying to break through. It has a very similar chart pattern as crude oil. Actually, had a sharp drop and sell off about a week and a half ago, maybe 2 weeks ago now. It has rebounded very quickly, and it's trading at the 50-day moving average. It's also trading at two previous highs that it made back in July. So it's stuck under resistance, trying to figure out if it's got enough momentum and can break through that and rally up to the $1,900 level, or is it going to pull back and consolidate a little bit? I think gold had put in a bottom a couple of weeks ago. It was a very major support level. There was a lot of volume, a lot of fear, and that's usually what puts in a bottom for a commodity. So I do think gold is trying to hold its ground here and will do well going forward, but it's still not in favor. It's not in an uptrend yet when you look at it as a short-term trader perspective. Silver is kind of in the same boat. Silver is a little bit more bearish, yet it is forming a bear flag, and actually looks like it might want to go back down and test those lows from a couple of weeks ago, back down around $22 an ounce. Right now it's around $24 an ounce. So there's still, about an 18% potential slide, or a 10% slide in price if it was to drop from here. But overall, they're not the sector really to be in at this point. They are still telling us they're trading sideways or lower, and that momentum just hasn't shifted yet to the upside.
Chris, what's going on with gold itself?
With gold, gold, the U.S. dollar, I think, is playing a pretty big role in what gold is doing. The U.S. dollar has got a very bullish kind of chart pattern starting to form. The dollar is now at support. It's at the 50-day moving average. Because it's above the 50-day, it's primed and ready to bounce and start to rally. And if the U.S. dollar does rally from here, we could see a very strong move and to the upside, and that'll put pressure on metals and keep them trading sideways or lower for a few weeks. I think that's kind of the bias for gold here. Is it's got some headwinds simply because the dollar is trending higher. The dollar's at support, and if the dollar keeps moving up, it's going to mute any rally in precious metals over the next little bit.
Bitcoin, what's the action there?
Sure, yeah. Well, Bitcoin, it looks like it put in a nice bottom. It found a bottom at around 30,000. It's rallied up. It broke through a basing pattern that it made around that $41,000 mark. And that was several weeks ago now. And since then, from the low around 30,000, it's formed a series of bull flags. It's formed 3 bull flags. Right now, it's pulling back. It's still in another little bull flag pattern. It is pointing to higher prices, and the next push up will probably bring us somewhere around $52,000 per Bitcoin, and that's going to get us close to right into a resistance zone on the chart. I think if we get into that area, that is a level where we've seen Bitcoin tag several times, whether Bitcoin was above it or below it. It found it as a short-term support or resistance area, and because we're coming up underneath that level, it might act a little bit as resistance going forward. But Bitcoin, has started a new uptrend. It's making a series of higher lows, a series of higher highs. All the moving averages are sloping up again, and prices above those. So it is, poised to continue to move up, and eventually we'll see if it can break to all-time highs. And if it does, that is going to signal, I think, a very big move going forward. If it can break that pattern over the next several weeks or over the next couple of months, it could create an explosive move to about $90,000 a Bitcoin. But it does have to break that around $66,000 per Bitcoin level, and this pattern that it has could be very explosive for a very quick, almost 50% gain going forward.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen from the technicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@housestreet.com, and we'll ask that question for you. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.